Did Jeff Bezos just sell Amazon stock at the top just like he did back in 2021? We've got to talk about that and the Q2 numbers, which just came out from Amazon. What is going on, investors? Hopefully, guys are doing well out there. I tell you what, I think we've got a full-blown market correction on our hands after Amazon reported earnings. After the bell today, we are seeing shares of Amazon decline by about 5%. We'll show that to you technically. Is this technically a buying opportunity? Can you step in here and buy the dip? We'll talk about that as it relates to Amazon. We've got to talk. Over the past year, you've seen shares of Amazon up 37%, year-to-date up 21%. But like I said, I think we've got a full-blown correction going on in these market, a resetting, if you will, of what's been happening now. In terms of Amazon, the second quarter came in at $148 billion worth of revenue. You normally say 14 because I can really only think of maybe two companies that put up that triple-digit multi-hundred billion dollar revenue. Amazon is one of them. You don't see that number very often. That was 10.2% growth year over year, but it missed expectations by a lot, by $760 million. The expectation was for 148.76. I'll blow this up so you guys that are losing your eyesight like I am can actually see this. The high-end estimate was for $151.2 billion. Guys, we came in at 148. That's not great. The low end was 146.5, so up and above that. But here's one of the reasons why, and there's several reasons why the stock is selling off in the after hours. We'll talk about that more in depth here. The Q3 guidance came in my opinion, a little bit light. Net sales expected to be $154 to $158.5 billion. The consensus was for 158.3. The high-end estimate was for 162. Look at this. Even the low-end estimate was for 153, and Amazon saying their low end could potentially be $154 billion. This includes a quarter that I believe includes Amazon Prime Day. So they already have those sales inside of their sales book. They already have a general idea what those sales are going to be, and they're guiding basically a little bit light or a little bit underneath the consensus estimate. Now, Amazon typically comes in a little light, and so when you miss in the second quarter by $760 million, we wonder if we're going to come towards the low end of this estimate. As again, you see consumers stretch. You see the AWS business under a little bit of pressure from Google and Microsoft. We'll talk more about AWS here in a second. But things are coming up a little bit light for Amazon, but not all hope is lost. This company is doing some nice things. We'll see it here from a financial perspective. Now, you have that $148 billion worth of revenue. You can't just gloss over a number like that. That is a massive number. Compared to last year, you were at $134 billion. Now, what this company has done a nice job, like all companies across the board, is they're keeping the rest of their cost in check. Now, two costs that this company can't really pull a lot of levers on is, first of all, cost of sales from $69 billion up to $73.8. Their fulfillment cost, some of that is internally, but the price of fuel, the price of salaries for those Amazon delivery workers. Also, when you're using FedEx and UPS, you don't have control over those costs per se. $21.3 billion up to $23.6 billion. But across the board, everywhere else, you're seeing a flattening of the cost structure. Technology and development went from $22 billion up to $22.3 billion. Sales and marketing actually went down from $10.7. We saw this at Meta last night as well, from $10.7 billion down to $10.5 billion. General and administrative, $3.2 billion down to $3 billion. So we're seeing this across tech. Is you're able to reduce your sales and marketing budget. You're also able to reduce your general and administrative budget. That is helping bolster up your profits, but that's not going to happen next year. I don't think you're going to be able to do that next year. This will also have an impact on this economy. These sales and marketing staff, the general administrative staff, they are not making as much money, or they're getting laid off, and eventually that trickles down to the real economy. I think we're starting to see that. Your total operating expenses at Amazon went from $126.6 127 up to 133. Again, largely driven by cost of sales and fulfillment cost. We'll talk about also the fact that cost of sales rose over at Amazon, because when we look at the segment results, this company has a two-ended marketplace where they sell on Amazon. Some of it is first-party goods. Some of it is Amazon being the seller. They're actually acquiring the item and selling it, very similar to how a Target or a Walmart or a Costco sells. But they also have third-party sellers, similar to Etsy, eBay, and other areas of the marketplace economy. And we're going to see a dramatic fall off in third-party services. And so that could potentially drive cost of sales going higher, as Amazon maybe has to fill the void in terms of an inventory perspective with their own inventory. Total operating expenses, like I said, 133. Look at your operating income over at Amazon, from 7.7 billion all the way up to 14.7. So really, really strong there. They're earning, like a lot of these companies, a lot of interest on that cash. They are spending a little bit on the interest expense, but your net benefit there is nice. So you pull down to a net income number, which is basically double from where you were last year. $6.75 billion of net income on a quarterly basis, all the way up to 13.5. So all of that is trending in the right direction for Amazon. We're on kind of this $14-15 billion pace as it relates to operating income, because you see over the past 6 months, you earned about $29 billion. So every single quarter, you're earning about $15 billion. You'd expect this probably to jump up a little bit, maybe even meaningfully, as we move into the fourth quarter when the company's net sales begin to skyrocket. Now, the other thing that we're monitoring when we've looked at Amazon's earnings is the fact that this North American e-commerce business, this is about to become the biggest from a profit perspective. It already is the biggest from a sales perspective. $90 billion of sales in North America, $85 billion in operating expenses gives you $5 billion in operating income. Look at this. Last year, you were at $3.2 billion. The international e-commerce business has just more recently squeaked out operating profits, $31 billion in net sales, about $31.4 billion in operating expenses. You're basically just hovering over break even, earning a $273 million profit. Last year, you lost nearly $1 billion. Now, the all-important AWS, everybody's going to have their eyes on this, because we just saw Microsoft put up a 30% growth rate. I believe that Google was kind of in that same growth rate perspective. From a growth rate perspective with AWS, you came in at 19% growth, and that's certainly underneath the peers, but you do see a reacceleration of those business as the company earned 16% growth, 12, 13, 17% growth. So you had a reacceleration of those revenues year over year, although some of it is coming off maybe what you would consider maybe a lower growth rate base, but strong nonetheless as it relates to AWS. But certainly you're seeing impacts from competition take away the growth rate. But here's the important thing about AWS. Look at your operating expenses, from $16.8 billion up just fractionally to, we'll call that $17 billion. So your operating income skyrocketed from 5.3 up to 9.3. So the North American e-commerce business, still not the biggest from a profit perspective, but if you continue on this pace, I think we're probably 18 to 24 months away from saying, hey, this is actually an e-commerce business with an AWS business as well, although we'll see, obviously, AWS will continue to churn out the profits. Now, from a cash flow perspective, it's everything that you would expect from a company that worth nearly $2 trillion, although in the after hours, you're going to have a meaningful decline in that valuation again if these after hours declines continue to hold with Amazon. We'll talk about the technical chart here in a moment, but here's a cash flow statement. You pull down a fantastic, like we talked about, $13.5 billion worth of net income last year. It was about half of that. You look at your operating cash flow growth over at Amazon over the past year, you went from $16.5 billion all the way up to $25.3 billion. You see for the last 6 months, that's actually an acceleration of the operating cash flow up to $44.3 billion for the past 6 months. So an acceleration. You're at, it looks like $19 billion in the first quarter, up to $25 billion. Here's also really interesting with Amazon, and we'll certainly have to look at the conference call. I'm sure somebody is going to ask them about this. Your purchase of property, plant, and equipment. When you're looking at Google, when you look at Meta, when you look at Microsoft, the purchase of property, plant, and equipment is almost all data center. It's all data center build out. It's the GPUs and all those types of things. Now with Amazon, it's a little cloudy what purchase of property, plant, and equipment. Certainly some of it, maybe even a lot of it, is data center, but also some of it can be fulfillment center as well. Notice the growth that you experienced here from 11.5 all the way up to $17.6 billion. You rarely see a company with this type of number. For the past 6 months, you spent $32 billion on purchase of property equipment. So you've had an acceleration there in the most recent quarter. We'll certainly look to see what that acceleration was due to. My guess is it's all about that data center, and you actually want to see that from Amazon as they have competitors spending almost this much all on their own. Now, in terms of what they're using operating cash flow, look, you had $25 billion of operating cash flow. You burned through about $17 billion of it, building out data centers, some fulfillment centers as well. They are repaying the long-term debt, and that's about it. They're not paying a dividend yet over at Amazon. They're not really buying back the shares. No, they're definitely not doing that as well over at Amazon. From a balance sheet perspective, they've got a boatload, a ton of cash sitting on the balance sheet. It's basically almost identical to where you were at the previous year. From an inventory perspective, they are a little elevated on inventory as it relates to that December timeframe, although with an e-commerce company, you probably want to compare year-over-year inventories as you moving into back to school. You're also moving, this was also moving into Prime Day as well, and we'll talk about the third-party sellers as well, as I have some firsthand experience as it relates to that. We talked about long-term debt. They continue to tick this down a little bit, not really something overly a concern considering how much cash they have on the balance sheet, considering how much interest, per quarter, this company generates $1.2 billion of interest income. For the first 6 months of the year, they've earned $2.2 billion of interest. Now, they have interest expense at $1.2 billion, but net, they've earned about $1 billion on their cash. So the long-term debt is not a problem over at Amazon and in a dropping interest rate environment. And I think based on these results and what we're seeing in the markets, you're going to have a dramatic drop in rates, probably similar to the growth rate that you saw with the Fed being late to the party as it relates to raising rates. They're certainly, I think, in my opinion, late to the party in dropping rates. Now, speaking of parties, you got online stores that's growing at about 6%. Your physical store is growing about 4%. That is a decline over the previous period. The online store growth at about 6%, I would say, is right in line with expectations. I think the big disappointment, and it's twofold for Amazon, is the third-party sellers. They made some changes to different types of fees. They raised the fees, different types of storage facilities, and they made some changes, and it was a big negative. Look at the growth rate, down to 13%, and we've actually seen a deceleration over the past several quarters, 19% down to 16%, although from Q4 to Q1, you probably would expect some deceleration, all the way down to 13%. This was the third-party sellers was something that was growing at an 18 to 20% growth rate. And this is really high margin business because you're literally just collecting fees. It's very similar to eBay or Etsy or something like that. It also impacts your advertising services because these third-party sellers turn around and advertise on the platform. And look at this, your ad business went down to a 20% growth rate. Now, certainly still great, but look what you were growing at, 23, 22, 25, 26, 24%. Well, we only grow 20%. And if these third-party sellers are saying, bye-bye Amazon, I'm going to go sell on eBay or I'm going to sell on my own Shopify store, well, that's really, really bad news. I also think this is somewhat of a sign of the economy that we're in and we're about to enter in, one where it is a little bit stretched from a discretionary goods perspective. Subscription revenue grew 11%. That's also a deceleration. That's your Prime services. Your AWS business grew 19%. That is good news because that is actually an acceleration, although again, compared to the industry where the growth rate is over at Google and Microsoft, this is certainly lagging behind, although they come way ahead of them both in terms of what type of revenue they're generating. And finally, you have the other business that is a little bit lumpy as that has licensing of different types of streaming content, also some business models where maybe they're not fully enough, mature enough to put into some of these other categories. I think there's some line items here that are of a concern for Amazon. The third-party services, I think they're going to have to reach out to sellers, maybe lower some fees, not across the board, but potentially in certain categories on Amazon to get these sellers to come back on the platform, because if we see the growth rate in the third-party sellers to continue to decline, well, this ad business is going to start to peak out as well. Now, speaking of peaking out, Jeff Bezos, I tell you what, this man times his sales of Amazon stock at the perfect time. Back in 2021, you can probably go back and look at the press releases. He unloaded a bunch of shares of Amazon in this time frame when the shares were at about $180. And then shares, like most shares in the stock market, just absolutely fell off the cliff. I mean, peak to trough on Amazon, you had a 56% decline in shares in really a short period of time, like literally a year and a half. Now, we're seeing more recently, Jeff Bezos unloaded his shares again. He's buying yachts, he's buying all kinds of property, he's hanging out with good-looking women, and he's having a good time with his money. He certainly has earned it. Now, more recently, though, Amazon has traded in a little bit tighter range. One way to kind of look at this is the fact that you could have bought Amazon at $177 per share, which is the value of the shares in the after hours. Well, you could have bought that back in February. You could have bought it back in April. You could have bought it back there literally last month or about a month ago in June, and we were touching there also in July. Shares are consolidating at this range. Now, this upward trend that we've been in with Amazon is still intact. In fact, it's probably even a little early to buy shares at this 176 level. I probably wouldn't be wildly aggressive if you want to add to a position of Amazon. You want to start a new position. Wouldn't be overly aggressive. If you wanted 10 shares of Amazon, I mean, I think 1 or 2 would probably be my max here. We've definitely made a high at 201 back here in July, and retesting that area based on these numbers, I don't think are necessarily possible in the shorter term. I think we've got some Amazon-specific things that they need to work out as it relates to third-party sellers. But the good news is this company is actually starting to make money on their e-commerce business, which wasn't the case. We should continue to see momentum in the international business as it relates to profit. I would expect that the growth rate in terms of profits for North America continues to grow, and AWS will lag behind Google and Microsoft, but they're doing a very nice job controlling cost, so these operating profits in that unit will continue to soar, and it'll be just a question of Amazon. What is it going to spend all of its operating cash flow on? For the most part, they're going to spend a lot of it on purchases of property, plant, and equipment. That has a long-term payoff when you look at the fulfillment centers and the data centers as well. Overall, okay from Amazon. It's definitely understandable why shares are under pressure in the after hours. This company has some questions, and certainly as it relates to the third quarter guidance, which includes Amazon Prime Day, certainly not as impressive as you'd expect. I think we've got a full-blown correction coming in the stock market. You've already seen it in the semiconductor sector. I think it's coming for the rest of the market. Folks, that was Amazon's Q2. We've got more videos coming later today. Good luck with your investments.